Fundamentals of Accounting, Chapter 3, we're going to take a look at examples 5A and 6A from your textbook. In 5A, we have Linda Kipp, and she started a business on May 1st, and we're going to analyze all the transactions for the first month of business and correctly put those into the T accounts. And then 6A just tells us we're going to foot and balance the T accounts, so we're going to kind of do all of that together. So for A, it says that she invested cash in the business, $5,000. So keep in mind that we're looking at a transaction, and for every transaction there's at least two accounts that are affected, and the debit and the credits must match. And remember that the left-hand side of our T account is the debit, and the right-hand side of our T account is the credit. So if she invested cash in the business, I am increasing my cash. The business is increasing their cash by $5,000, and cash increases with a debit. So I'll put 5,000 there, and this is transaction A, so I'm going to put my A there. So there's my debit. Now I need to have a credit. Well, anytime we invest cash and start a business, it's going to increase our capital. Okay, so now I've increased my capital, so my 5,000 debit equals my 5,000 credit. On B, it says I bought equipment for cash, $700. If I bought equipment, I now have a piece of equipment which increases my equipment account, and it was valued, or I spent $700 on it. Okay, well, how did I pay for my equipment? Well, it says I bought cash. Well, anytime I spend cash, it's going to decrease my cash, so I'm going to put a B in here, and I'm going to decrease my cash by 700. And I just noticed this accidentally put balance in there, so I'm going to do that. Okay, so there's my $700 debit to equipment and my credit to cash, because I spent cash to buy a piece of equipment. Then C says I bought some more equipment for $600. So C, and a trick, if you put a space after that, it won't change it to a copyright. And I bought $600, okay? How did I pay for it? Well, it says on account. On account doesn't mean I gave them cash. It means I'm going to pay them later. So I used my accounts payable, because I'm going to pay them later, and it was $600. Okay, so there's my $600 credit and my $600 debit. Then it said I paid cash on account for equipment purchase in transaction C. So what's happening now is I'm paying for that $600 piece of equipment. Okay, so if I'm going to pay for it, I'm no longer going to owe $400 of it, so I will put my $400 here. So now I only owe, the difference between these two is $200, and I paid cash. So paid cash decreased cash for $400. So D has a $400 debit to accounts payable or a $400 credit. Now, sometimes here students want to go ahead and put it on equipment again, but we're not buying equipment. We're paying for equipment that was bought previously. Then I withdrew cash for personal use. So anytime that happens, we always debit our drawing account. We're increasing the amount that they're taking out. Drawing increases with the debit, and since they took out cash, it decreases our actual cash account. Okay, so now we have to fit and balance the accounts. So in order to do that, I take the total of the left side minus the total of the right side, and the balance goes on the side with the biggest number. Okay, so you can see here that 5,000 is going to be greater than all of these. So you can put in, I'm going to put in equation equals, and I don't know if it'll let me do this, sum of this cell minus the sum of all of these cells, and it's $3,000. Okay, these aren't quite as hard. 600 minus 400 is 200. 5,000, that's all there is. 900, that's all there is. Add these two up. Okay, so I have 1,300. All right, so that's footing and balancing my accounts after I put in all of my transactions. Okay, now you can also go a step further and make sure everything balances, but we kind of did that as it went. We made sure for every transaction a debit equaled a credit.